Good afternoon, traders. So in today's video is just a friendly update on two more pairs that we executed trades in the New York session today. In the previous video, we were discussing AUD/USD. We were actually looking for an optimal trade entry based on the previous video. If you want to watch that video, it's the previous video. So basically, we were waiting for price to come down to an optimal trade entry as far as aligning with our fib trick, which is this highlighted blue cell here, in confluence with our trend line on the higher time frame. Price did come to our fib trick zone, which is the move completed within the zone, but it didn't quite align with our trend line. I wanted more than one confluence. The more confluences you have, the better off you are. So until then, we were just going to sit on our hands, monitor this trade, set up an alert for price to come down to a key level and move on from that trade. So until then, we are focusing on the next trade. So I do have some great news. We have GBPUSD. I entered this trade about 9 a.m. a New York session, and we are actually out of the trade, and I can tell you my reasons why. The trade was about a 1.43. We actually ended up closing just roughly like a 1 to 4. It was like a 1 to 3.7, somewhere along that lines. And the reason why I got out of this area rather than completing to the minus 27 or the minus 61.8 was because I saw some signs of rejection, and I'll do a top-down analysis of that reasoning. So I'm going to delete all the technical analysis, do a top-down analysis of what happened, and just give you an example of how I got in and out of the trade and where stop losses should and can be and where take profit should and can be and what I saw. So let me delete this. So first things first, I wanted to be in and out of the market. I didn't want to be in the trade for consecutive days. So I'm looking at the hour chart. I'm looking for something maybe some hours, maybe a day at the most. And again, being out tomorrow, New York session. So I drew my trend lines, and I wanted to touch as many wicks as possible without cutting within the body. And at the time, price was printing, and price was wrong maybe 7, 8 a.m. And then price actually ended up wicking up and nearly touching my trend line to the T. I actually adjusted the trend line just slightly just to ensure alignment. I'm not being biased, but that was the room where I thought price was going to be exhausted at, and you can see these prices were wicking over here as well. So this is the reason why I adjusted my trend line. So I had my confirmations there. I had, wick touch here, there, second time, third time, fourth time, and then fifth time, which is a beautiful entry point. So from there, I actually wanted to draw my fibs, and I wanted to see where price was and where we could potentially be going. So I ended up doing from this swing high, and the swing high, what I mean for those that are more novice, this swing to this swing low to this retracement, aligning with a optimal trading entry, which is that golden zone. Price did wick up to the 78.6, which we love to see it, but the bodies actually ended up closing below the 61.8, which is the strongest rejection zone on the Fibonacci tool itself. So those are my reasons for my bias there. We also noticed that we are in a bearish market, considering we are below the 50 EMA. It's also too, most importantly, market structure. You have to identify market structure. I did see a market structure shift after we created this swing high here, but then price then broke this low, which would have been the higher low, which then we began to implement and create a market structure shift. So those are my reasonings there. And also too, on the hour chart, I wanted to see the fib trick. So I wanted to see if the move was completed within the move to have more confluence of entering this trade. So price came up, and we are going to draw our fib trick zone, and we are going to go from here to here, and we can see that price beautifully taps the trend line, taps a 78.6 retracement, and completes the move within the move using the fib trick, and price, the body itself, this is all price action when this was happening, is below the 50 EMA. So those are my multiple confluences there. I did go up to the 4 hour just to see some structure. Pretty much saw the same thing, nothing too much. We were just below the 50 EMA, bearish market, and the daily didn't really give me more indication than what I needed already. I was just planning to begin this trade till tomorrow at the latest. So going into the 15-minute, I had to jump to the 15-minute. I had an alert once we created a higher high below this these. I'm gonna call it a double top. And also too, this double top for me is a form of inducement. Basically, this is where price makes equal highs, and then there's a stop hunt and rally to the upside, taking out our retail traders before they actually capitalize on the short. So for me, that's another indication too. I did see candlestick analysis. I saw a doji candle here, and then I also saw price action. But I actually, at the time, I was actually into the 5-minute chart, and I was actually looking for price action on the 5-minute chart, and I entered either this candle or this candle. I want to say like somewhere in here exactly, and wrong tool, sorry about that. We're gonna put the entry here, and then we followed our rules. We're gonna jump into the 15-minute for more clarity, so you can kind of see where we are, where we were, and actually I might need to go up to the hour to show all of the viewers. So you can see that price respected the 61.8, but we didn't know that in the time of the price action. So we put the stop loss, say we're respecting the 70.6. Remember the rule, just outside of the previous Fibonacci level zone. And for this sake, we could have put it just outside of the completed zone. I believe it was like 16 or 17 pips, if I'm not mistaken. I have to look at my trading forum. But then that was how we measured our stops. And then as far as take profit, we were going to target the minus 27 as take profit 1 and the minus 61.8 as take profit 2. I did see stuff on the 4-hour time frame as well. I did see some type of inefficiency, and I believe I actually ended up drawing my inefficiency based off the hour time frame because I was looking for a short-term sell. So I ended up identifying some inefficiency. Let me get my other tool here, and I drew an efficiency from here to here. And for me, this is where price is going to come back to fill as almost like a magnet. Think of inefficiency as a magnet. If there's inefficiency or imbalance in the market will always tend to want to come back and fill it. So, but it may not fill beyond that. So for me, catching another bias, I'm like, maybe price, I'm going to come down to the minus 61.8. And we actually moved down to identifying a order block as well. And let me change these colors for you so you kind of know, keep everything the same. Order block, and we have a fair value gap. And for me, seeing this in confluence with the market, like I said, I want to have a healthy risk reward ratio, but I'm not going to be greedy and end up missing out on the entire trade. So like that would have been a 1 to 5, even from there 1 to 4, and we actually ended up taking it. I think it was like a 3 point around here somewhere. We ended up getting out. I'll have to go down to the 15-minute because I saw price creating some type of exhaustion. I think I might have saw this candle here. So I actually got out around, let's say, a 1 to 3 or 1 and a 3.5, and we closed that trade and we are done. So with this, let's just say 1 to 3 plus 2.5, we're up like 5.5, maybe close to 6% for the week. And that's even still counting the 2 losses. So proper risk management is key. If you want me to go in about risk management and what a lot size is and what to risk and how to measure pips and how to do those calculations, please leave a comment. So then we also had EURGBP. We just got into this not too long ago as well. I would say maybe around same time-ish. And basically this was on a previous analysis where we still had our markup and we saw that price came down and respected our trend line. Let me zoom out so you can see. And for me, I'm like, this is I think this was a 4-hour daily trend line. I think this was like it was like a daily trend. So it was a very, very strong trend line. And for me, I ended up seeing price creating a double bottom. A double bottom is, let me go to the 15-minute for some clarity. I saw price rejecting here, and I saw price rejecting here, creating that double bottom. I do see a variation of, you can call it inducement. Basically, price came to this level multiple times. If you go to the 5 minute, let me see if I go to the 5 minute for you. So you can see price came down and was struggling, and then price wanted to attempt to stop hunt this area because it's inducing buyers to be like, okay, we're gonna rally, and then it does a fake out, and then here's the actual optimal entry. So from here, I believe I entered on the 15-minute or 5 minute chart just solely off this strong daily key level on using that trend line, and I actually entered off the 15-minute candle. I saw a bullish engulfing candle there. Let me highlight this for you, and I'm taking my trade up to nothing too long term. As we could tell, we're in a downtrend, and I also identified some inducement on the hour chart here. So you can tell there's some inducement imbalance, and like I said before, price is going to always tend to fill that gap, and you can see prices starting to push very strongly to the upside, and I'm only taking it to that level, and also to its inconfluence to our around our 61.8, just below that 78.6 level. I'm feeling very confident at this 61.8. We may have some type of exhaustion, tap, fill, and we're in and out. This trade is roughly just a quick 1-to-3 ratio, and I do intend to see price come up and respect this and continue downward. It's either going to come back down, respect, and make a low, and we may bounce in this triangle zone until price decides either it's going to come out or we're going to collapse, and decide which direction it's going to trend for a long-term trend. So for me, those are my few trades, updates, and if you're liking these videos, please press that like button, and don't forget to subscribe if these videos are helping you out. Thank you. Bye.